This one indicator will be very helpful for many of you guys who want to avoid false breakouts. Now let me be clear. There's no way you can always avoid a false breakout. It will happen at some point in your trading career. No matter how cautious you are, you will at least have one each month. Okay, you're not going to just suddenly skip out on all of them. Unless you're extremely selective and you're always getting involved at the beginning of the move and then the second wave of the move, but not getting involved on the third one or the fourth one, that if a fourth one even happens. So the way I like to use the ATR is I always like to go onto the daily chart, and it's this little indicator over here. The ATR stands for the average true range, and it's by default set to 14, where it takes the prior 14 candles. So when I'm on the daily chart, it takes the prior 14 days range and divides it by 14, and that gives you the average range. But I will have to caveat that this ATR indicator is more so useful for stocks that are trading sideways, because once you start getting into stocks that trend up, you will start to see that they're exceeding their ATR each and every single day, almost every single day. And obviously some days it's going to stall out, but for the most part, the ATR is pretty much almost going to be useless at these points in time, because you don't really, you can't really justify where the price is going to go just based off of what the past 14 days of consolidation did. All right, so once something's like really trending and is starting to kick into high gear, that's when the ATR indicator kind of just gets thrown off. It starts averaging up, of course, because these next few days the range is extended. It usually does $3. Now it's doing $7 every single day. So after 14 days, the ATR is more so going to be at the $7 range, maybe $6.30, $7.50, whatever. But the ATR, it helps keep you focused on just getting the meat of the move. So it's great if a stock does $7 a day when it's trending up and the ATR is $3, because guess what that means? That means that when you're trading that stock intraday, well, it usually does $3 a day, and now it's the past few days it's been doing 5, 6, 7. So as a result, why would I be worried if it gets to the $3 mark or it gets close to the $3 mark? I could probably take that trade and it'll probably work out in my favor, because it could go to $4 at the very least, and even though the ATR says $3. But that's if the stock is trending, and I feel like that by saying that, some of you are going to take any kind of stock that you see just has a big green bar on one day, and you're going to be like, oh my god, it's now reversing trend and it's going to go higher. So that means, based off of what Plain Talk Trading just said, that once it starts trending, you can start ignoring the ATR because it's going to have to average up eventually. No, guys, you still need context, okay? So there's ways that you can identify whether a stock is actually trending. The very first green bar does not necessarily mean that a stock is uptrending. Likewise, the very first big red bar does not mean a stock is downtrending. It's an alert, but it is not a confirmation. There is no information behind it that can tell you that this is for sure going to continue going higher. All right, we have multiple examples of that. You can go to literally any daily chart and just kind of like analyze on your own time, or I can make a video if you guys have questions. But with the ATR, more so it's useful on sideways trending stocks, so you can basically get an idea of what's the max high and max low. And the way I like to use the indicator is at the open, you have no information other than pre-market, but I don't care about pre-market. It doesn't really give me much. So I take the opening price, go to the daily chart, look at the ATR, take the opening price, add the ATR to it, and I take the opening price and I subtract the ATR to it. And what you will find is that basically sets the range, but once the stock pushes up aggressively, what that means is that the low range that you have now on your chart is more than likely not the low range anymore. Whatever the high is, you're going to now have to subtract that high minus the ATR, and that will give you the low end for the day. And so you just have to keep on adjusting as stocks push higher or as they push lower, whenever you want to adjust. You don't have to like continuously after every single penny or dollar. You don't have to keep adjusting. But it keeps you in check so that you have an idea of like, okay, the stock is trading down right now. I was expecting the stock to go from $80 to $83 because the ATR is $3, But now that it went from $80 down to 77, I can't expect that the stock is going to go to 83 today. I can only expect it to, at max, at most, go to $80, and that's it. Um, so it keeps you in check. And what we're going to look at is basically, we're going to look at the ATR, and I'm probably, I have to go to this side. There you go. I'm probably in the way, so I'll try staying on this side of the video for now. When we look at the ATR for these days, you see that so this is my custom indicator, by the way, which you can get through my Patreon, join the Discord. I have the script in there. So the candle range over here on this day is $1.37. But if we look at the ATR, it was $2.57, 59 cents. So as a result, we can see that the stock did not, trade its total range on this day that it could have. And as a result, you could see that like whenever it comes down to ranging stocks, don't expect it to exceed the ATR. It could touch the ATR, but don't expect it to exceed it. There are going to be obviously outliers where it exceeds by like 10, 15 cents, whatever. But overall, don't expect it to always, exceed the ATR or always hit the ATR. That's just not the case in trading. I wish it was that simple. That's why I say that I don't like indicators. I just like the ones that do the math for me, so I don't have to back calculate, how the stock usually performs over the past 2 weeks. So then we go to this day, candle range $1.51, but the ATR is $2.81, again, underneath the ATR. So if I'm taking trades and it's basically still within that range, I could still potentially profit. I'm just not going to be taking a trade if it gets to that ATR. That's essentially what I'm just trying to hit hard on. So $1.89 and the ATR is $2.96 on this day. $1.37 versus $3.21. $2.72 versus $3.25. As you can see, the range was very close to the max ATR. So on days where it's not like a doji, obviously it's going to be closer to the ATR. On this big red day, we have $2.76, but the ATR is $3.26. So we were very close. On the day prior to that, $2.69 versus $3.77. So you get what I mean? So you just have to constantly adjust and realize that, the moves that a stock can do is really dependent upon how it has performed in the past. And then once it's trending, it will start exceeding the ATR. Okay, so basically think about the ATR as not this holy grail indicator where price will always hit it. Think of it more so as a guidance so that you basically set a range on the stock. So basically when you basically have a stock chart and you just, set a high over here and a low over here, and then the stock chart opens somewhere over here in the middle between that, and then it goes up, and then it comes down, then it goes up and down, maybe down over here, and then it comes all the way back up. You basically have set a range for that stock to not exceed either bounds. That's all the ATR is really useful for. It's just the average true range of the stock, and it's useful for sideways stocks. Not too useful on trending stocks, but in terms of like finding out the minimum that it's going to go when a stock is trending, that's the way you can think about it, is that ATR is always going to get hit as a stock is trending. But when a stock is sideways, that ATR, you can expect it to not get hit, or maybe gets hit once in a while. Okay, so hope this video helped you guys understand the ATR. You can choose to use it in your trading. I use it just so I have an idea of like, okay, I'm in a trending stock. This thing is going to go to the ATR value of the past 14 days at the very least. So I can expect it to go there. But beyond that, I have to be cautious if I do want to take a trade, because I could also get a false breakout. And, that will lead you into a lot of trouble, obviously. All right. So I hope this video helped, and I look forward to seeing you guys in our future videos. Later. Thanks for watching. Everything you need to refine these entries is in the Trendline Strategy playlist on the left. If your strategy is fine, but your head isn't, the Psychology and Expectation series is right below it. Please go through them. Most traders will watch this and go right back to over-leveraging or chasing candles. Don't be that guy. Fix your approach before you blow another account. Strategy is the easy part. Discipline is the work.